Hello, good evening, everyone. Before we start, I just want to do some testing on the sound. Okay. Okay. Yeah, if you can hear me, just click yes. If you can hear me, if you can hear my voice clearly. Can everyone hear me now? Can everyone hear me? Okay, great. Okay, so if everyone can hear clearly, then I guess we can start our webinar tonight. So before I start, just a very quick introduction about myself. So my name is William. I'm from Phillip Futures. I'm a senior dealer and also marketing executive of Phillip Futures. So I will be the speaker tonight to share about which sector in Bursa Malaysia has the potential for us as a retail investors to invest. Okay. So before we start, just a very quick disclaimer. So whatever that I share tonight is only on knowledge sharing purpose, and it doesn't really constitute any buy or sell call. If you want more advice, you can contact us personally. Okay, so about our company, just for those that join our webinars for the first time, okay, just a very quick introduction on the background of our company. So our company, Phillip Futures, we were incorporated in October 1995, and we are a wholly owned subsidiaries of Phillip Capital Holding Group, okay. So our headquarters is based in Kuala Lumpur, and our mother company is originated from Singapore. So our mother company is based in Singapore, okay. So our company, Phillip Futures, we are a trading and also a clearing participant of Bursa Malaysia Derivative Berhad. So for this, we actually hold a CMSL license. Okay, so basically it means that we are a legal broker house that we can open branches and do business legally in Malaysia, and is regulated by the Security Commission to safeguard our investors. Okay, so other than that, we are the first broker in Malaysia that provides an online trading platform for you to trade both local and foreign products under one single platform. Okay, so you do not need to log in different multiple accounts just to trade local or foreign products. Okay, which is also why we are among the top choices for professional traders in Malaysia. I would also like to take this opportunity to say a very big thank you to our clients. If you are listening, okay, without you, we won't be able to achieve this. So in 2019, we have got 3 big awards from Bursa Malaysia, okay, and all thanks to our clients here, if you are listening. So our mother company, Phillip Capital, we actually have network all around the globe. Okay, we have offices in over 14 different countries. Okay, for that, we don't only offer products in Malaysia only. We also offer products from all over the world, like from the US, from Hong Kong, from Japan, from Singapore, etc., etc. So if you want to trade something, definitely there's something that suits you lah, huh? So if you look at our company name, Phillip Futures, we started from futures trading, and also is something that we are very proud and very focused on, okay, which is futures trading. Basically, futures trading can be broken into different categories, but this is not our main topic on the webinars tonight. Tonight, our main topic will be on the contract for difference, which is on the stocks itself, okay. So if you are interested to trade stocks with a leverage, okay, we have these products called the contract for difference, which allows our investors to trade stocks listed under NASDAQ, under New York Stock Exchange, and under Bursa Malaysia with very, very attractive leverage. Okay, so if you want to know more, you can talk to us privately. Okay, you can PM us or ask any questions in the chat box, and we can try to answer as much as possible. So why trade with our company? First of all, we offer 24-hour support. So meaning if you are trading foreign products at night, okay, after the office hour, there is still someone at the dealing line to help you out. So you can just dial in and someone is able to support you. Okay, next is we offer the latest market news for all our clients, exclusively for our clients. Okay, so we send out commentaries and stuff for our clients to update them about the latest news. Next is we offer advisory services, meaning if you have no clue about how to start trading, you can talk to us. Okay, we are more than happy to guide you through lah. And also, like I mentioned earlier, we don't just offer products from Malaysia, we also offer products from all over the world. Now, this is how you can learn with us. Okay, first, we offer one-to-one coaching session. If you need more help on understanding futures or understanding CFD, how to trade them, be it on understanding our platform, be it on technical analysis, feel free to contact us. We have this one-to-one coaching section that we are more than happy to guide you through. Okay, next is the free seminars and webinars like tonight that we try to organize on a monthly basis. Okay, last one will be account opening is free of charge. Okay, if you want to open an account, you can do it for free, but we require you to sign in to just activate your account. Okay, and also for those that are interested to open an account from the comfort of your own home, we have this online account opening. You can just scan the QR code, which I will put it up again later on at the end of the webinar if you want to do so. But yeah, just to let all of you know, we are the first broker in Malaysia that actually allows our clients to open account online. Yeah, you don't need to come here physically. Okay, just a very quick run through on the CFD platform that we offer. So our CFD platform, we offer live chart. Okay, we offer price feed. We allow our clients to set alert, etc., etc. Even the basic one like stop order, the limit order for you to take profit or stop loss is all available in our platform. Okay, this is just some view of our platform if you are curious about it. Okay, now let's just move into the main topic tonight. Okay, which is the potential sectors for investors to look at in 2021 on Bursa Malaysia. So to start off, we will look at some of the macroeconomics. Okay, let's look at some macroeconomics from that part of perspective. If you have any questions, you can just if you have any question, you can just type in the question or the comment box. I will try to answer them during the Q&A section later on. Okay, so okay, this particular chart is where I got it from the latest announcement from Malaysia government, okay, official website. This is the GDP that the government announced for Q4 2020, okay, which is released in February last month. So if you look at this chart, okay, look at this chart. Basically, every sector, the services is dropping, the agriculture sectors is dropping, the mining and quarries like palm oil, etc., is dropping. Okay, the construction is dropping the worst. Okay, if you look at it, there is only one single sector that actually stands out, which is the manufacturing. So what is under manufacturing is the electronics products. Okay, what we call this is which is the technology stocks listed under Bursa Malaysia. Okay, the semiconductors, these are all considered as electrical and electronic. Next will be petroleum and chemical, rubber and plastic. If you look at all the industrial products company like steel, metal, all these are called under manufacturing because they manufacture, they use raw material, they process it and turn into something else, which is what we call manufacturing. So if you look at it, overall, our GDP dropped 3.4% in Q4 and 5.6% annually in 2020. But if you look at it, the manufacturing sector, it grew 3.3% in Q4, in Q3, and then another increase of 3% in Q4. This is something that, to me, is something that as an investor, we know that when we want to invest, this is the sector that we should look into it. Is from the macroeconomic. Okay, this is how I personally usually look at the macroeconomic to know which sector actually stands out in Malaysia. Okay, so from here we can narrow it down. Okay, we can narrow it down. Okay, now this is the indexes of the products that we mentioned earlier. The first one is industrial products. Okay, the first one is industrial related stocks. If you look at the chart here, you can see that has rebounded really well and is even higher than pre-COVID level here. If you look at the chart here, okay. Next will be the electronic and electrical stocks. This is the so-called technology indexes. If you look at it, after the dip, the technology stocks has went up tremendously. Okay, it's really crazy. It's a few times higher than almost double from a few times higher compared to pre-COVID level. So if you basically the GDP actually tells you in advance, okay, they kind of tells you that, okay, these are the sectors that were really doing very well. So as an investor, we can look into these products to benefit ourselves, okay. Now, what are the other macroeconomics that we can look at? First is the I think this is the news that everyone knows about, which is the 10 years digital plan blueprint, okay, of the economy, which is what our government wants to do. The first one will be the cashless payment, okay. So all the public sectors, they want them to use cloud storage, okay. And phase two, they want all the schools to have internet access, to introduce this online learning, to spend 15 billion to build 5G infrastructure. And lastly, they want digital economy to account for 22% for our Malaysia economy, which is, I think currently, if not mistaken, is only 10 or 10-ish somewhere there. So they want to double it. Okay. So what does this particular information comes to your mind when you read the news? Okay. First of all, if you ask me, I would think of government is going to spend. So when government spend, basically the GDP is going to go up. So the private sector, the listed company is going to benefit. Okay. So when they invite the private sectors to invest, the foreign companies to invest, basically it's all GDP contribution and also to attract foreign companies to invest. Okay, so all these are spending. So spending in general is actually good for economy. So if you ask me, these are all the macroeconomics that we can look at. And lastly, is it possible for because our identity card is still on a card, so is it possible to even one day, if they want to turn into an e-identity card, we have no clue, okay? And if there is, which company is going to benefit from it, we have no clue for now, okay? But it's something that we can look into. Okay, next will be the vaccine thing. Okay, these are all the macroeconomics. So when you read this news, basically, I believe all of us, we do have these things comes into mind, which is, okay, we can start traveling, we can go out and spend money. My business, if you are a businessman, your business can resume. So all these encourage spending. So just now, the blueprint is a spending project, and this vaccine is another spending catalyst. So a lot of people, they are worried that, oh, the market is very high right now. Is it possible to have another crash? Every time when the market is at a high point, everyone just worry about market crash. So, but we as a retail investor, instead of listening to the news or reading the news, what other people say, we should also look at it from our own point of view. So when everyone is spending, the government start to spend, then does that mean the economy is coming back? Okay, and next will be the inflation. If you look at inflation, right? If you look at inflation, copper or metal, copper has reached a 9-year new high. Okay, the prices of copper has reached 9-year new high. Palm oil prices has reached 10 years or 12 years new high. Soybean and corn is like 6 years or 7 years new high. So, and crude oil, nonetheless, from 20 bahts, I don't take the negative part into consideration because that is not going to happen in the real world. It only happens in the futures market, okay, not the physical market. So when crude oil went up to the price of the crude oil has reached the pre-COVID level, although the economy has not 100% back to normal yet, but the price has already reached that level. So what does all this inflation means to our economy that we will discuss in a short while? And also, if you read the news, everyone is saying that Nasdaq is going to crash, the technology stock is not going to crash, all because of the bond yield rising. Okay, if you look at the bond yield, it is rising. But first of all, instead of reading the news that the increasing bond yield is going to make the market crash, the technology stock crash, why don't we ask ourselves, what are the theory behind of an increasing bond yield? Okay, this is something that we all should to think about instead after we read the news, so that we won't blindly follow the news, what the news tell us. Okay, so what does inflation really means? So inflation basically is okay, we start from how is inflation being measured. Usually it's measured from the consumer price index and producer price index. Okay, so what is consumer price index? Consumer price index basically just means how the consumers spend. The more the consumer spend, the higher the consumer price index. So this is very logic. So when everyone spend, they tend to buy more stuff. Okay, they buy more stuff. When they buy more stuff, the demands go up. Okay, so if you look at inflation itself, all the commodities, the price is on the rise, and commodities are usually back to supply and demand. So what actually causes the prices of the global commodities to go up is either the demand increase or the supplies drop. So whichever, so if you look at it, I reckon that the demand on the commodities are very high right now. If you look at soybean and corn and stuff, okay, and copper, China is importing a lot of it. They are importing even more. In 2020, they import more of the soybean, corn, and copper than before the COVID level. Okay, even under the COVID situation, they can still buy more of these for compared to. So what is all this thing about? It's all about the demand. So you can see that the demand is actually there. The demand is there. So when demand is there, it actually tells you that the economy is actually coming back. So inflation, basically everything is getting more expensive, meaning the demand is there, people start to invest, people start to spend. Okay, so it's a sign that inflation is a sign that our economy is coming back to life, and as long as it doesn't go over the crazy benchmark, then to me everything is healthy lah. Okay, it's just that the speed is a bit fast. I think that is what worries the market, because everything just happened in very short period of time. But if you look at it, actually every time after an economic crash or after a shutdown of the economy, inflation will happens, because everything go back to zero. So when zero, suddenly everything restart, it tends to go up faster than normal. So if you ask me, it's kind of normal lah. I mean, it's something that is expected even in the 2008 crash if you look at the inflation. Okay, so inflation, like I mentioned earlier, is a supply and demand thing. So when people is buying more, people is spending, it tends to contribute GDP to our country. So every time when we judge our economy, we just look at the GDP. When GDP go up every year, we will say economy is good. Okay. And also when people is spending, people is making business, we have employment in the market. So general, if you ask me, I don't take it as a very bad thing lah. Unless it goes until that the inflation rise faster than the salary, then that should worry the market. Okay. And last one, this time we talk about the bond yield. Okay. So basically, bond yield is like, why does the yield go up? The interest will go up. Okay. It basically means that when people is dumping the bond, which is the price of the bond dropping, then when you buy, it's just like how you buy a stocks. The cheaper you buy, the higher your dividend yield, right? So if you buy public bank at 20 bucks, if it give you 2 bucks of dividend per year, you get 10%. But if you manage to buy at 10 bucks, your dividend yield, your interest return will be 20%. It's even higher. This is exactly the same concept, you see. So when bond yield is dropping, meaning everyone is dumping the bond. Nobody wants to buy the bond. Everyone is selling the bond. Okay, everyone is selling the bond, which caused the yield to go up. It's like everyone is throwing public bank. That's why public bank got cheaper and cheaper. And then you buy, then your dividend return is higher. You see, this is totally the same concept. So why is people withdrawing money from bond? Usually bond, people consider it as a safer investment because the volatility is small. They get a fixed interest return. So when people is dumping bond, they are actually shifting their money into riskier asset. They want to invest. They are thirsty to invest right now. This to me is all kind of part of the sign that the economy is recovering. Okay, so if you ask me, I treat all of this as a positive sign. Okay, although the news is going against it, but I personally reading it as a positive sign. The only thing that, if you ask me, the only thing that really will worry is that when the inflation is rising faster than expected, probably the U.S. Federal Reserve is going to increase the U.S. interest rate faster than expected. Okay, because usually they use inflation rate as a benchmark for them to decide whether they want to increase the interest rate. So if they do, I guess money from globally will probably pull some out from the stock market and go back to US. This should be something, but at the moment, I believe in 2021, we should not see see this to happen. Okay, but next year or another year later, probably yes, we might be seeing it. But for now, 2021, I reckon overall, I think everything is still healthy. Okay, it has seen a good sign for people to invest. So when market is very lively, is active, I think we should also join the market with a proper risk management. So okay, now let's move to the part two. Okay, so before I started this part two, just let me to probably briefly explain my personal concept on how to identify the hottest sector. Okay, because if you do realize, no matter which part of economy, okay, cycle, no matter which part or which quarter of the year, okay, the money in the stock market is always there. They are always just shifting from different sectors to different sectors. They basically just shift around now. So even if the market is down right now, but definitely the money is going to shift into certain sectors. So we as an investor, it is our job to identify which sector is that for us to invest, regardless what kind of market cycle. Okay, we have downturn, we have very bullish. Even in the bear market, there are still a sector that is going to outshine everyone else. Okay, so it is our job. So in order to be the hottest sector, to me personally, there are two criteria that I personally reckon needs to fulfill the two criteria. Okay, the first criteria, if you ask me, is the room for imagination. So the products or the services, the earnings ability of that particular sector, the future prospect of that particular sector, it needs to have enough room for the investors to imagine. Okay, just to imagine. We don't want to see the fact yet. Just to imagine. This is the first criteria. The second criteria, after we imagine all these things, right, we need to be able to see some solid supporting, which is the earnings report, the quarter's report that the company release every quarter. It needs to support our first imagination. Okay, the room for imagination. It needs to support, but you need to identify it before we see the facts. Moment you see the fact, basically your risk is higher than those people that have not seen the fact. Okay, so basically you need to fulfill these two quarters. So probably I can go through this. Can semiconductor become the hottest sectors in 2021 first? We can go through this first, and then I will continue this part. Okay, but you do remember my two criteria here. Okay, now so for fundamental, let's just do a very quick fundamental on the semiconductors. Okay, so what is semiconductors? A lot of the people, they are very afraid of technology stock because of the high valuation. The valuation, no doubt, is super high. Okay, super high, and they are very rare or very raw, or they are just not familiar with semiconductor. They don't know what is this thing. So basically, semiconductor is like the brands of a modern electronic. So in our phone, in our computers, there's a brand, and that brand, we call it the semiconductor. It's for everything to link together. Okay, so other than that, second, the advanced the technology, okay, the more advanced the technology, the higher the demand of the semiconductor. Okay, so if you look at it, our world, what is happening to our world? Our world is moving from diesel or petrol vehicle into electric vehicle. Our world is moving from manual level, okay, into automation. So our world is moving from 4G into 5G. Okay, so what does this mean? This actually means that the advanced the technology, the higher the demand of semiconductor. So if you look at it, this is how I perceive it. So when everybody have the same perception, it's very hard for you to be able to buy something at a super low valuation. I think it's super hard unless there are some really bad news on the sector that the probably is like another COVID, that the production stop or the demand just suddenly gone, then probably you can see low valuation. So or else I reckon it's pretty hard for you to see low valuation on this kind of sector, because they are the futures of our world. Okay, and also just to look at the chart, you see this is the higher, you see this is the nanometer, which is the brands of like the brands of the, you see it's getting smaller and smaller. This is the future. How small is that? You see, compared to 2019. This is the 5nm nanometer invented and only come out in 2019. So this one, if you look at it, it's just 2-3 years ago, but now it's like can fit 5 of them inside here. You see the size, 3mm. So it's getting more and more advanced. So, okay, these are the demand on the fundamental of the semiconductor if you look at it. Now, next, let's look at the upstream, the downstream, and also the midstream of the semiconductor. So just a very quick explanation, because a lot of people, I think they are very confused with all these semiconductor stocks. So first of all, the upstream, we talk about upstream. So upstream, we call the designer, the IC designer. IC stand for integrated circuit. Okay, the IC designer, they design the chip. Okay, they design it. So these are the upstream. They enjoy higher margin. They enjoy higher profit margin. So it's companies like Intel, AMD, Broadcom, etc., etc. So DNO is one of our Malaysia company actually involved in LED lighting. They actually do design a bit of the chips. So I kind of group them under the IC design just a little bit. Okay. Next, after they design it, they will pass it to a midstream company to actually to do the chips. Okay, they will get companies like TSMC, SMIC. This is a Taiwan company. This is a China company. They will get this kind of company to do it. And this one, I believe all of you are quite familiar with it, which is Siltera, which is has been taken over by DNEX. Okay, and the share price has gone really mad. Okay, very very mad, like a few 100% in a month. Okay, so these are the midstream that they just help the IC designer. They design. Okay, they own the patent, and then they get this group of people to help them to design. Now, when they try to build the chips, okay, when they try to produce the chips, there is another company in our Malaysia called the Franken. Okay, they highly, I think a lot of their business are based in Taiwan. Okay, they will help you because when you want to manufacture chips, you need machinery, right? You need machinery. So Franken, they kind of help you to protect your machinery. They maintain the machine. So when the demand of the chips go up, when this kind of company the production goes up to 100%, 90%, then of course they need higher maintenance. So it's kind of like indirectly benefit the Franken, which is helping this company to do maintenance. Then after they build the chips, right, they will move to the next category. I will call it like the mid to downstream. Okay, this is more to mid to downstream, which is so-called the OSAT lah. If you read a lot of people, they just say OSAT, which is outsourced semiconductor assembly and test. So if you see S&T is assembly and testing. Assembly means that the chip that this company produced, they will put it all together onto a board or something, you see, like a board, like a green thing that we always see in our handphone, in our TV console and stuff, the green, like a motherboard or something like that. The assembly, they put it together only from the product that this group of company produce. And then another group of company, they will do testing. So they test whether the thing is it faulty before they assemble, okay, before they put it all together. So these are all the companies that in Malaysia that they do that fall under these two categories: the Inari, Unisem, MPI, KSM, DNO, and the G-Tronic, the Globaltronic. Okay, so these are all the companies that involved in this kind of sector. Now, from here, there are another few categories. Like when they want to do testing, they need equipment, right? They need equipment. So the equipment come from another group of company. So when the demand is very high here, then basically the demand will slowly flow all the way down. So this group of company, they come up with the testing equipment, the so-called ATE. If you look at it, a lot of people, they just say it this way. So they provide equipment to these sort of companies to do testing, to assemble, to put everything together. Okay, but from here there will be another group of companies like the test socket compactor. They help these are all the testing products for this part of the equipment. Okay, they are part of the equipment, and this one is like also provide part of the products for the equipment. Okay, like they help you equipment. You need to bend the steel to turn it into certain model and stuff lah. So these are the supporting companies for all this, and all of these are falls under Bursa Malaysia listed companies. Okay, so after they test and nothing's gone wrong, it falls to the next category, which is the the assembly company. This I call it a downstream already, because the technical skill involved are not as high as the upper and midstream. Okay, they basically just assembly board. They basically just put everything together and turn it into like a proper motherboard or something. Like they just put everything together lah. So we have BS, which is helping Dyson to do so. Okay, SK Press, Pi, which is a subsidiary, should not, if not mistaken, is a subsidiaries of Foxconn. Okay, e.g. So all these companies, they fall under the category of board assembly. Okay, so after this, they basically put everything together. Then it goes to consumer, okay, which is the consumer companies, Apple, Dyson, Samsung, Xiaomi, Huawei. These are all considered. So basically, these are the supply chain of semiconductors. So basically, when the demand is very high here, okay, the demand will slowly flow down here until the last part. So it's all linked together. Okay. Now let's look at the next one. Okay, so what is really happening in the semiconductor sector? If you look at it, there are lots of news has been coming out last month, that a lot of news, the demand. So if you look at it, even PlayStation 5, okay, you definitely need semiconductors inside, like a brand, like I said, it's a brand. All these are advanced electronic, okay. Even PlayStation is having a supply shortage, okay. These are all the news dated in February, end of February. Now it's only mid of March, so it's like less than 1 month ago. So PlayStation is under shortage, and even automotive companies like Porsche, they also warn they reckon that the global shortage can last for months. Okay, and even companies like Volvo, they kind of like they decide they bet that the petrol cars is going to fully die out in 2030. So electric vehicle, if you look at it, electric, okay, the word electric means that you need a lot of semiconductors for the electric to move around the whole vehicle. So semiconductor is like a blood, it's like a blood in our body. It helps the blood to the power to circulate, you see, because you no longer use diesel, you don't use petrol anymore. So you need the electric, very high demand of electric for the blood to circulate in the car, for it to move, you see. So not just this one, even Mercedes, they are targeting to probably produce 75% of their cars. Mercedes they are targeting to produce 75% of the cars that they produce is going to be electric cars by 2030. So this thing actually is going to happen sooner than what we can expect. If you do read the news, right, even Singapore, they kind of like, they try to reach after 2025, they won't take any new diesel or petrol car registration anymore. Even Singapore, our neighbors only. If they are trying to implement this kind of policy, I believe that this kind of policy will very soon flow over to our Malaysia. Okay, whether you want to accept it or not, I think this thing is going to happen sooner than you can imagine. So even like China, they are targeting to reach a peak of carbon dioxide emission by 2030. Okay, what does it mean by peak? Peak meaning to say that this 10 years time frame is the max that they can produce carbon dioxide. So after that, everything needs to go downtrend. So what does it mean to go downtrend? Downtrend meaning that you cannot build new, you cannot have more of these petrol cars and stuff in the market. If you still adopt this kind of policy, then definitely your carbon dioxide cannot reach a peak, which is the maximum in 2030. So this, if you ask me, is a kind of revolution. And also for 5G, if you look at it, what does electric car is the biggest thing in electric vehicle? If you ask me, it's not just that it's charged by electric, is the autopilot thingy. You see, every single I say like companies like Google, like Baidu, or the search engine, you see, all these data collector, the very big giant data collector like Apple, they invest super heavily into the autopilot system, you see. So in order for autopilot to come true, almost every country needs to switch to 5G, because 5G is like a compulsory compulsory technologies for autopilot to come to life. I think since every search engine, the big giant is investing super heavily into this right now, I think it's going to happen sooner than you and me can imagine. So other than that, okay, so if you ask me, I think that all these policies introduced by Singapore, introduced by China, introduced by Europe, even Europe is going to probably, there are news saying that Europe is going to ban diesel powered vehicle or petrol powered vehicle to be on the road after 2030. So it's just a 10 years time frame. And all these policy only come out in the second half of 2020 and in the early of 2021. All these policies in US, in China, in Singapore, all over the world, they only, by all the big automotive companies, all these new policy and their prediction, only come out in 2021. So if you ask me, all these kind of technologies or this kind of thing, we call it like a revolution. It's something like, when we were in 15 years ago, our handphone do not even have internet connection, and suddenly we tell you that, okay, my mobile phone can connect to internet. Everyone is like, wow, wow, wow. So this is like a revolution. So if you ask me, 2021 is the year of, is the infant stage of a revolution. This is my personal point of view. It's like a very infant stage of a revolution. So are you able to write this revolution? Of course, if we say it's a revolution, you don't expect the valuation to be very cheap for you to enter, unless, like I said very earlier, you see another economic shutdown or something that suddenly the demand just suddenly go away. But when all the countries are coming out with all these policies, I think it's very hard for the demand to suddenly go away. This is just my point of view. Now, okay, other we look at the big picture of these sectors. Now, let's just look at some of the comments. If you read quarter reports, usually they do release quarter reports every 3 months. So they kind of have this section called the prospect. Okay, so we can just, if you are lazy if you can't understand, at least read the prospect, then at least some of times we can understand what is happening in the market. So this is UWC quarter report announced in 2021 quarter one. Okay, I just highlight one sentence last that all of us can understand. Okay, it says that we have not only been receiving enquiries and orders from existing customers, but inquiries from potential one as well, locally and globally on regular basis. This basically tells you, and which is in line, if you look at UWC quarters report, actually has been reporting a historical new high quarter report, profit and also earnings. Okay, so it's in line with what they show you, you see, and what the prospect tells you is in line. So, and also it's in line with the news that we read. So basically, these are kind of like a hint. It's like a hint, you see. And next, let's look at another company, the SKP. This is the downstream, which is the if you look at it just now, I mentioned that this is the assembly one, which is just to put everything together. So this is the less technical one that I mentioned earlier. If you look at it, they are telling you the same thing. This is Q2, quarter 2, 2021 quarter report, which is also the latest one. It says that the group continues to receive inquiries from both existing and potential new customers for new projects. So if you read all these there are different streams. UWC is on the middle stream because it requires more technical skills, okay? But SKP is more on the downstream because less technical skills, so profit margin definitely is lower. But if they are all telling you the same information, then definitely is a sign that this sector has been doing really well. So is this okay? Now let's look at another company. This is called KSM. Okay, this is the mother company is a company called Sunrise based in Singapore. Also one of the biggest testing company. This is on the midstream. Okay, we just read this particular. This is from the annual report, 2020 annual report, the latest annual report available. So if you read this, it says that this is just on the. It kind of gives you an idea what kind of demand or what kind of market outlook that we are expecting from these sectors. So if you read it, it says that traditionally conventional cars, which is like diesel or petrol vehicles, contain on average of $330 value of semiconductors. So normally, like the old Camry, the old Toyota that we are driving or Honda, basically it only contains like this much of semiconductor for them to do testing, you see. But once we switch all our cars to hybrid vehicle, to electric vehicles, the semiconductors that contain in the vehicle, the testing cost, the cost that it requires for a single car, how much it might cost for them to do testing on the semiconductor might range up from $1,000 to $3,050. So what kind of demand are we talking about? What kind of growth are we talking about in this kind of sector? So from 300, we just said to 1,000 is 3 times. From 300 to 3,000 is 10 times. So this is just the start of revolution. So if you ask me, so these are the market outlook that is given. It's not given by me. It's not given by whatever report that I search online. This is more related to our own Malaysia companies, which is the outlook that they gave us. Okay. So if you look at it, okay, so in January, mid-January to February, all the stocks, if you look at all the technology stocks, they break out with really, really high volume after they consolidate for a 3 to 6 months. So what does this kind of breakout, very strong breakout means? Okay, theoretically, no doubt that after it breaks out, it shouldn't break the support anymore for a super strong one. But if you ask me personally, after it break out, if it can break out so strongly, okay, this is Penta, Franken, Vitrox, and MPI. These are we call the very big companies of the semicon in Malaysia. Okay, very big one. We just focus on the big one. So if you look at it, how they need after it consolidate for so long, if they want to push it back up again, it definitely requires a certain amount of money for them to push the price from here to here. Okay, so after they push up, of course, they are not supposed to break this, but if they does, okay, we just don't rush into it yet, okay, because the trend hasn't shown you yet. But as long as, if you ask me, it doesn't break this entire consolidation level, overall trend is still considered as healthy. Because if you look at weekly chart, you look at monthly chart or a bigger picture, the trend is still intact, okay? It's just that if you look at daily chart, definitely the trend is not there. But of course, we as a trader, we do not want to put our money in, especially if you are trading with CFD. We are talking about precision. So precision means you do not want to do average down kind of action. We do not want to do average down. Okay, we want to buy and the stock will immediately move. Given the fact that we need to buy at a slightly higher price, we don't mind that. Okay, so overall, okay, Vitrox is kind of not as healthy as the rest, but still is still considered, to me, still okay. Okay, but not so okay compared to the rest, okay, because it's still holding above the consolidation level. So this consolidation can take a bit longer, probably, but nonetheless, it's still a very good company. So yeah, so what does a breakout means to you? So a breakout means money into this sector, and then suddenly they probably want to take profit. They want to do a shakeout. We don't know, and we doesn't need to guess it. We will know moment the chart turns upward. Okay, we will know moment the chart turns upward. So now, how can investors they maximize your return with our company through our products? Okay, first of all, if you buy a traditional stocks, I would just use a very simple one like Maybank. Okay, I use Maybank. So for Maybank or a stock you want to buy in the stock market, you need 100% of the capital, correct? So if you want to buy Maybank is at 8 ringgit, you need 8,000 ringgit in order for you to own 1,000 units, correct? So if you today you try to trade with our CFD, the margin for Maybank is only 10%, meaning to say 10% of the 8,000 ringgit for you to own, you only need 800. So with 800, you are able to hold 1,000 units of Maybank. So if the price move from 8 ringgit to 9 ringgit, how much do you make? You make 1,000 ringgit, okay? But remember, how much do you put in earlier? You only put in 800 ringgit to hold the stocks, you see? So basically, the profit and loss that you will experience in our CFD is fully identical to the stocks that you trade with your local broker house, okay, with your normal broker house. It's basically totally the same, okay, the profit and loss that you are going to experience. The only main difference is that you don't need so much money to hold it, okay? So if you want to understand about the mechanism, you can feel free to PM us, we can let you know more about it, or you can just type interested and give us your contact, then we can PM us on our Facebook page, okay, then we are more than happy to guide you through lah. So now, okay, now let's look at the margin requirement on the tech stock. I'll just give you one example, like I mentioned earlier. Okay, so the margin requirement for Franken. Okay, Franken is no doubt a very good company, a very strong company. The trend is very strong. Okay, all this over the past 5 years. So if you want to own 1,000 units of Franken with your normal share at 5 ringgit, you need how much? 5,000, right? With our CFD, you only need 25%. Okay, with our Phillip CFD account, which is 1250. Okay, which is 1250. So with this money, with 5,000 you usually buy from the stock, okay, which is 2,005. Then another 2,005 can ring. So our CFD is actually a very, very good trading product, if you ask me. Okay. Okay, now we also offer, we don't just offer stocks from Bursa Malaysia. We also offer stocks listed under US. Okay, if you want to know more about what stocks do we offer, you can find it from our website, or you can PM us for us to send it to you. Okay, so this TSM, right, I think is a very popular global beef semiconductor manufacturer. Okay, it's based in Taiwan. They produce over 50% of the global semiconductor. So the share price is right now 130. If you want to buy 100 units, right, you need 13,000 USD. That is a lot of money for you to hold one single counter. Okay, but if you want to participate, but you do not want to tie up so much money under one counter, you can trade with our company at 30% margin. Okay, which is you just need to put roughly 4,000. You are able to hold 100 units. Okay, if the price move up from 130 to 140, you earn $10 USD per unit. Okay, so basically, like I mentioned earlier, the profit and loss calculation is fully similar to the normal stock account that you trade. Okay, and also just now I think I said I want to share something about I want to share something that I want to share later on, which is if you look at the entire, just a very quick to summarize the whole thing, because I only focus on technologies today, especially the semiconductor related. So if you look at the entire circuit, right, at the moment, if you are trading stocks, you should realize that the smart money, they kind of jump really fast all over the place. It's like today the oil and gas stock go up, then after a week or two it cools down, then it moves to metal stocks, then suddenly it cools down, it jumps to banking stocks, then suddenly it cools down, it jumps to tourism stocks. It just jumps here and there really quickly. So if you ask me, why is the money is always in the market, they always need to park in some way. It's just that which sector. If you ask me, all these stocks are that I mentioned earlier, okay, all this industry, if you ask me, do they have, like I mentioned very first beginning, there are two criteria that we need to fulfill in order for it to be the hottest sector, or we so-called the black horse or the hottest sector. Okay, there are two criteria. The first one is the room for imagination. So if you look at all the sectors that I mentioned earlier, the tourism, the banking, the oil and gas, do they have room for imagination? Yes, they do. We do have it, because the market is recovery, then we are expecting the company to come back to life, you see. So this is the room of imagination. Now, the second criteria, which is, like I said, the actual real profit for you to support your imagination, you see. But we do not want to see it yet. Okay, we do not want to see it yet. So for this second criteria, right, if you look at it, do you think the earnings of all the industries that I mentioned earlier is able to double up or triple up, or at least go up by another 50% before COVID level? I highly doubt it. So if you look at tourism, if you look at banking, can the earnings that they provide after this be 50% higher than pre-COVID level? If your answer is no, then probably there is a limitation to it. So if your answer to this, the second criteria, the answer is no, then probably you can still see gain. Let's say if you are expecting a 30% increase because of people has been trapped in Malaysia for so long, they want to just get out of Malaysia and travel, they want to go out and spend money. So yes, they do, but can they double it in a very short term? The answer is no. But can they go up by another 30%, 20%, or maybe 50%? Very optimistically, can they do that? Probably the answer is yes. But if your answer to this is only 20%, 30%, 50%, then probably this is what you can expect from the share price as well, because they have all rebound back to the pre-COVID level. So if you only expect the earnings of these sectors to go up by another 20, 30, 40, 50 max, the percentage of the earning, then probably I reckon the share price from the pre-COVID level, this is the kind of that we should expect. You don't go like super bullish of it, oh, this is going to be the black horse and stuff, because we are trying to identify the hottest sectors. Every year, definitely, no matter how the economy is doing, definitely there is one sectors, okay? This is just what I want to summarize overall. Now, we have 10 more minutes, so I will leave it to the Q&A. But before the Q&A, I just want to let all of you know that we are actually running a promotion on US share CFD. We call this a double deal because we are charging you only 0.3% on the brokerage. This is super low. Okay, this is super low, even lower than a lot of cash account or even similar. If you go to other banks that offer US shares cash account, which means you need 100% cash inside the trade, I believe it's about the same. But we are a leverage account, okay, and we even give you a lucky draw. Okay, you might stand a chance to win all of these. Okay, just to let all of you know if you are interested. Okay, now just let's move on to Q&A. And this is our online account opening. If you are interested to open an account, just scan the QR code and fill it out. And if you want to know more about US, about CFD, like to trade Bursas and stuff, personally, I monitor the markets quite closely. I personally monitor the stocks quite closely. So I tend to want to catch it, which sector is going to be the hottest every year. And also you can see every time before a sector wants to move, definitely there are some signs to it, be it the price starting to go up, be it the volume starting to go up. So you can try to monitor from there which sectors is probably going to be the biggest potential. But of course, technology is not at the moment, it's not showing any sign at the moment, but it's very worth our what do we call it? Our attention. So if you have any question, you can just type in the comment box and I will try to answer them. Okay, I'll try to answer them. Just let me read the questions and yeah, I will pick some questions to answer. Okay, the first question here, US CFD, you buy, do they have expiry date like futures? First question. No, our CFD, there is no expiry date. You can hold to it as long as you want to hold, as long as you have sufficient margin inside to hold, you can just hold to it. If you want to know more about the mechanism, you can message us on our Facebook at Phillip Futures. We will try to, you message us your contact details. We will give you a call. We will get someone to contact you to let you know everything about it. Okay. Okay. This is another question. It says that I'm interested. Okay. What is the minimum financial requirement to trade CFD? Financial requirement, I think this all falls under the mechanism of our CFD, which you can message us you PM us on our what should I say? You PM us on our Facebook page. We will get someone to contact you to let you know more about it. Okay. Yeah. Sorry to say. Okay. Is there any more question? Let me see. Okay. Buntat said that he missed the beginning. Yes, we do have. Okay. Let me see. Do you guys have any more questions? Let me see. Okay. Will you see tech sector to recover early April 2021? Okay. So my own opinion on this one. Will I see tech sector? Okay. You see, this one, if you see all the reports that I put out earlier in February, right? It's February. You look at it. It's first or second quarter. So all the reports come out in February. Like I mentioned, every 3 months, the company will release the quarter report. So if the market is not buying the earnings right now, they still think that, okay, the valuation is very high, okay? You remember, like I mentioned earlier, you want to predict that this sector's the earnings is going to be super good, but people are not seeing the fact yet. When people see the fact, probably it's too late, you see? So basically, if you ask me, I'm still very bullish on the earnings of this sector. So if you ask me, the next quarter, reporting should be somewhere in May or June. Okay, so by that time we can review the technology stocks again with the earnings. If the earnings beats the expectation of every single investors, then probably the spotlight will again shine back into the technology stocks. Okay, now there is one question: semiconductor chip shortage. What is the impact, especially to the downstream manufacturer? Okay, now this is a very good question, especially like downstream. When there is a shortage, right? Like a lot of companies, the products that they produce, they try to reduce. If you look at the news, right, like GM, like Ford, these are really, really big automotive companies in the US, like the giant Ford and General Motors. Okay, they try to cut down their production. So when they cut down their production, right, companies like KSM, if you look at KSM that I mentioned earlier, they help automotive companies to do testing on the semiconductor. When they cannot produce the car, of course, it will impact the earnings of these downstream temporarily. Okay, but if you look at the bigger picture, we are talking about a revolution just now. Remember, now everyone is still driving a diesel or petrol cars, but when everyone is driving an electric car, do you think the demand of the businesses for all these downstream like testing company, especially on the automotive one, is it going to impact in the long run? So I believe the answer is no. So temporary, yes, it will be a shortage. But of course, there is also on the midstream, which is the production, is the good news. Why? Because they are producing. When there is a shortage producing the semicon, it means that their capability is running at 100% or 90%. They are running at full force. So meaning to say that that is benefit for them, but probably on certain industry is not so. But still, it breaks down to sectors lah. If you ask me lah, downstream, it breaks down to sector. Okay. So another question. Let me see. Which bank do you use for investors like me to make payment for CFD buying stocks, whether in Malaysia? Okay. So if you open an account with our company, you just transfer your money into our bank account to update into your account to buy US CFD or BND Malaysia CFD. Okay, Taiwan or other country we don't have like at the moment we only offer US CFD and Malaysia CFD. So if you want to buy, it's very convenient. It's just like how you transfer money into another bank account, as simple as that, because we are based in Malaysia. Okay. There is another question from Siping. He is asking, how does the banking sector looks like in the next few quarters? Okay, for this, definitely, I think the worst is over. Why the banking sector has been impacted very big previously is because of all the provision. Provision meaning that when the banking, they expect that there are certain bad debts and stuff, they need to do provision. So they were in advance kind of bad debts first. You see, if you are a businessman, okay, they will in advance bad debt first because they expect businesses to slow down. They won't be able to pay in the how long, and accounting has its own standard. Okay, so once they reckon they cannot pay, they will bad debt it first. We call it the provision. Okay, the technical word is provision. So after they do that, then I reckon that the worst is over. So I think for banking, it is going to slowly recover. But if you ask me, are their earnings going to be double of 2019? I don't know, and I have doubts lah. But if you ask me, can they go up by another 30%? Probably, I would say yes. When everyone is going back to business, people start to borrow money and stuff, you see. So the demand definitely is coming back. And the worst, like I said, is over. Market is coming back. Probably all this provision, suddenly everyone is paying money. The provision, they can reverse back. So it's no longer a provision. Then it becomes a profit to the company. So that will really actually double up the profit lah. If you ask me, that's my own point of view lah. Okay. This question here is about US CFD, whether is it Sharia compliance. I think whether is it Sharia compliance, it really depends on if the company itself is a Sharia compliance company. It's not US CFD in general. It's like Bursa Malaysia. You see, certain stocks they will list under Sharia compliance. Certain stocks are not. If you want to trade, we need to double check whether the company is a Sharia compliance company before you trade. Okay? Yeah. I think there are just one last question before we end the whole session. Is there overnight rates for CFD? If yes, how much? Yes, we do charge interest. Our interest on Bursa is 5.5%. On US is 4.5% per annum. So it will divide by 365 days lah. So of course there is interest. Okay, so I guess that is all for the Q&A section. Again, if you want to open a CFD account, or if you want to know more, you want to discuss with me, if you are our client, you can always feel free to come and talk to me lah. I mean, I'm very open for discussion. We can always discuss. We can always discuss which sectors that we can look at and stuff. Okay, if you want to open an account, you can scan the code, or if you want to know more about CFD, you can contact us lah, PM us on our Facebook page. Okay. Okay. So this is our just to let all of you know lah, we do have Facebook, we have YouTube, we have Telegram, we have LinkedIn. Okay. So try to search here, and whatever that we share tonight, if you want to rewatch it, you can go to our YouTube channel. You just search Phillip Futures Sdn Bhd. You should be able to rewatch it. Okay. Yeah, and our Facebook, we always post latest news. Try to follow us and also search us at Phillip Futures, PM us. Okay, I guess that is all for tonight. So thank you everyone for your time tonight, joining us here. I hope everyone learned something tonight. Okay, so again, if you want to know more how to trade, how to leverage your products, how to leverage your money to get a better return, you can always ask us about it. Okay, thank you everyone. So yeah, that's all for tonight's seminar. Thank you. Bye bye.